All right, so this training will be about entries as it relates to entries for support and resistance, and also supply and demand. So it will be two parts. First, we're going to look at entries for support and resistance, and then we will be looking for entries and supply and demand zones. A couple of things to point out: support and resistance entries are based on closed price action and pivot points in the market, and supply and demand entries are based on well, you're entering on an open candle and you're basing your entry on a zone area. So let's dive in to understand how to get the best entries, whether we are looking at support and resistance or whether we are looking at supply and demand. And just to, before we do that, understanding that with support and resistance, we have the market, let's say, let's say the market is in an overall, it's making an upwards movement, and so our optimal entries are at support to take it to resistance, or at resistance to take it to support, right? And so this would be your optimal entry, and this would be an optimal entry. And then conversely, on a supply and demand, we understand that within this bullish movement, the price has made areas where it was discounted, right? And so what we'll find is the supply and demand zones are kind of like a zoomed in version, right? And so we'll have the price do something like that, create a zone here, and then we would continue to take the market up, right? And so understanding that support and resistance allow you to, in a sense, capture the entire move. Supply and demand allows you to time your entry so that if the overall move is a bullish trend, that you're getting in when the prices are discounted, or alternatively, if it is a bearish trend, you're getting in when the price is retail. All right, so let's dive into support and resistance entries to be followed by supply and demand entries. All right, guys, so welcome to this training. In this training, we are going to be talking about entries specifically as it relates to support and resistance, not to be confused with supply and demand. So we look at support and resistance as pivot points where the market will eventually turn around and give us an opportunity to place our entries. Now, major importance with getting good entries is that it helps tremendously with your psychology. What we find is that some traders are their entries have poor timing, and so because of that, they are experiencing unnecessary anxiety, unnecessary stress, unnecessary worry about what the market is going to do. Now, understand that with what we're going over, technically you can use it on any time frame. The higher the time frame that you qualify the setup on, the more likely the bias will hold up. And so with that being said, it is recommended that you trade at minimum the 4 hour. I mean, you're welcome to trade other time frames. Just understand that the lower the time frame, the less strong of the signal, the less the strength of the signal is. So with that being said, when we are looking for entries, if you're familiar with the way that I trade, I typically will hold trades as long as I can, really. However, in that instance, we are basing our entries on support and resistance, right? If I'm in an intraday trade, or if I'm in a retrace or something like that, the trade being held is going to be dependent upon the overall move, right? And so because of that, when you set yourself up to get entries at specific pivot points, aka support and resistance, you do have the opportunity to basically milk the entire trade. Now, we're going to go over what's on your screen, and then we're going to actually look at the chart so that we can understand it here. Now, a couple of things to note about entries with support and resistance is that, like we said initially, it's based on pivot points. All right, it's based on points where the market has is giving us a signal that it's going to reverse, and we are basing our bias on a closed price action signal. Now, what often happens is traders that have less than good entries tend to base their bias on an open candle or an open signal, and because of that, they are experiencing like they don't want to miss out. They're just I mean, they see the trend could be going a certain way, and they get faked out more often because of the fact that they're not confident in what they're seeing. They're just saying, "Oh, it's going up, it's going up, it's going up. I don't want to be left out, so I'm going to jump right in." And so often, what we find is when you do it that way, not knowing the overall trend or the overall structure of the market, you are faked out, right? And perhaps if you're not faked out, it's just a bad entry in general. And so because of that, we have definitely we want to go over the best way to position yourself in the market. Now, what you'll see here on your screen is let's see here. So we're going to scoot this over just a tad. All right, let's see. All right, and I'm going to just zoom in a little bit so we can understand. Now, what we have, of course, with this particular setup, the top part is your resistance, and that is where price is rejected or resisted. And then at the bottom we have support. And so the best entries are found at these pivotal levels. And because of that, what we are looking for is a strong closed price action signal that the market will go up, right, and will continue to reverse, or in this instance will be supported at this level. And so the makeup of this, because we can see eventually it just kept going up, and then it reached resistance, and we're going to get into that part in just a second. However, let's focus on what we have here. All right, so to break this area down, we have the market being at support and then getting a common signal or price action signal of an engulfing candle. Now, what happens is the entry signal is the actual price action signal, right? So if you have your engulfing candles, if you have your inside candles, if you have your dojis, those types of things, your piercing patterns, these are all signals that we're looking for at support or at resistance to say, okay, well, the dynamic of this market is changing, and we are looking to take this market in a different direction. And so with the particular makeup that we have on the screen, we find that we have a nice bullish engulfing candle. And so that is our signal to say, aha, this market is showing me that it wants to go up. Now, you can see here where your entry candle closed out bearish. And so sometimes what happens is that you will see this happen during the course of being in a trade, because you'll get in and you'll see it going up a little bit, like the wick has painted here, and then you're like, okay, cool, whew. And then it'll for whatever reason turn around. And keep in mind, during this day, this particular candle would have been all the way down here. Now the challenge is if we're basing our entry on a closed candle, then we must base our exit on a closed candle. Okay. And so with that being said, sometime during the day, this candle looked like this, right? And that could have caused people to panic and say, dang, I thought this was going up. Now I'm 15 pips and it's gone against me 15 pips. So what should I do? I think I should close it out. And then the day end up, right? And it be closed out like that. And so when you are entering, if you are sure to base your entry on a strong signal at these pivot levels, it will give you more confidence in knowing that you can trust the overall signal, right? Keeping in mind that when you enter, so your entry candle, ideally when you're getting into this candle, you would want to be entering, and like I said, keep in mind this candle wasn't always as it wasn't as it didn't it wasn't only, what am I trying to say? It wasn't only bearish, right? During the day, it gave us a reason to go up, and so it could have looked, and this is going to look a little weird. However, it was like that at one point, and so because of that, we had an indication that this market was going to continue up, and so we placed our entry, right? And typically, the closer to the close, the better, right? The close of the entry signal. Sometimes to be cautious, I'll say, or to be conservative, some traders like to wait until the getting